Welcome guys, it's the Crypto Sniper giving you an update on, you guessed it, Bitcoin, of course, and how we're progressing on our primary scenario. Also, a wee update on YFI that we've done before, mentioning again that we have an amazing high liquidity, better looking at 50% just about market cap decimation, that we are getting ever closer to reaching for our primary short entries. So that is developing. Can I just say something while you're hitting the like button and subscribing? The amazing thing, many people in crypto only like bull markets, and bear markets are terrible and bad and they're painful and long and I don't want to be part of it and I just want to go and hibernate. Actually, when you get, and not only bear markets, we may be, at the end of a bear market, the late bear market, we may already be in a fledgling basing area, but downside setups generally, so without putting the general phrase of bear market out there, downside setups generally, particularly in crypto, have a habit of happening brutally quickly once they start. So it's hurry up and wait, wait, and then bang. And then what typically happens, unlike the upside where you can have trending, ups, downs, interim target met, pullback, sit around, wind up again and go, etc., etc. What you tend to find on the bear side is they smash down really, really quickly. We had this when we were short in and around the 6,000, 6,500 level in the 2018 bear market. When it smashed down to 3,200, it was almost instantaneous. It went really, really fast. We've had this in a multitude of actual sell-off opportunities that the tokens, once people are selling them, and you'll find altcoins are an even larger aspect of this because all bid disappears. And when all bid disappears and you're on the right side of that, what tends to happen is you get this air pocket effect. The market just capitulates until some element of bid, usually insiders go, damn, we can't let it go that far. We've got to put some bid in here. It represents, surely it represents some value at these levels. So you get really fast moves to the downside. And I'm here to tell you that in my overall opinion, we are getting closer to that moment where our chosen selected alt of great liquidity that is looking like it's due at least a 48% market cap with a little bit of overperformance on that, probably halvening, with real juice that you can get short quite substantial amounts and have quite good liquidity, in fact excellent liquidity, and ease of ability for getting out on your take profit, even in low activity markets. So we're talking a big token here. So you can find out, by the way, what token that is. Click the link below, book a call. It is the first link in the description. Click it. Friendly folks on the side there. We like to talk to everybody. What are your needs? What are your interests? And you don't have to land many of these trades a year. You can do 1 to 3 a year, and you can have 100 grand short and you'll take 50 grand out the market, and you can do that with moderate margin without having to have 100 grand. So enough of that said. What's going on with Bitcoin and what is the God market doing? So you'll know the shortest and briefest recap that essentially there was the possibility of a upside head and shoulder that we've identified here with a neckline in blue. And the briefest of reminders, in case there's someone new, there's a left, a head and a right shoulder that was in play. Now, the overall impression that gave was, if this was to be a reversal, the expectation would be, and I've drawn a diagonal on here. This is the only thing that's certainly new that I've not shared before. Amazing how that flag target was perfectly met, by the way. But I've drawn a line on here from when the triggering event occurred on the fat blue line, the teal blue line. That's this one. There's a thinner one just a little bit above it, more on that later. And you should actually have made that target in and around at the latest, and that's a long stop date. Typically our patterns perform well before our bull patterns, and as I've already mentioned, the bear patterns have a habit of happening once they trigger exceedingly quickly in crypto and especially on alts. So that line of efficiency, as we talk about it, there's an angle there with the horizontal line, how much it goes up for time elapsing. Now, the reason why people get irritated that you pivot is over time is elapsing and you fail to have good progress. So anyway, if we took the aggregate flight path that is from the triggering event to the December date we expected it to be have occurred by. And that's the other amazing thing about our methodology. There's a time stop. There's interim targets where we expect pullback. There's time stops. In other words, if it is not performing as it is moving, and it's not just at the very end when the time is up, it's how is it progressing during that. So for example, at this break, all this area above here is overperformance to the expected time frame under review. So as you broke, this is all a good zone. This is all a good zone. This coloring in above this line. But when you broke down here, you were starting to show some degree of underperformance, but we did highlight, okay, fair enough. You were setting up a falling wedge. It's okay to revisit the original level of entry. That's a second chance. It took quite a long time to do that from its triggering event. So that again is your horizontal axis. So you're getting a little bit of a lesson on time spans, and then you got a surge back up, and you only just crept back on time with a slight bit of iceberging, as I like to say it, little noses above the waterline of overperformance. So what we actually needed to see from here was the continued movement to the upside now from Bitcoin. But what actually happened was a series of events that brought it back down, right the way back down. And now when you come down for the second time to the same key level of significance that was, of course, your neckline for the original bullish call, what's now happening is A, your progress has gone backwards, and B, time has elapsed. And this is why we highlighted that this long period of low volatility, yes, you got the test to the upside, yes, you got the smaller test down that kissed the key level of significance to the downside, but despite all the analysis on that price behavior, what's actually happened is more time has elapsed out of the allotted time. And it's amazing how often the geometry that we get for our time stops, and you can learn how we do that by joining our community, watching us implement it in the markets, and seeing that things have to happen. Remember, there's a carry cost, there's an opportunity cost to everything. And geometry doesn't only give upside projections and downside projections, it can give time-based projections too, in terms of patterns. And we have a real methodology for doing exactly that. You can learn how we do that by clicking that first link in the description below and booking a call. Back to the Bitcoin. What's actually happened with the continuation of that low volatility and that dip and then this weak struggle up is that more time is elapsing without any material progress to the gradient that they have to catch up with to perform. Now, of course, it could go up and then just go through the timeout line somewhere here, and then you would close it there. You're long if you'd been long all this time. However, we became concerned about the general progress of Bitcoin and the time elapse, and we have no longs. And actually, we're arguing that it could be setting up a time for you to contemplate shorts because of that head and shoulder potential now that you have only went marginally higher. We started warning. Typical traditional technical analysis says new high, all good. We don't say that. We say marginally new high, and failure to build on that and reverse is actually bad. So that was a negative event when that only made it that much higher, failed to build up any further and started to slip and skid. Now, initially, you may have thought, falling wedge, we'll pump again. But this time, there was much more fatigue. You slipped out and you went straight into a news-based spill. This was despite news, which occurred here, of ETF coming and all of this. What we're finding is real fatigue. So, macroeconomics for a sidebar second. So we're just leaving the crypto realm. How is the general consumer doing in the Western world? Pretty poorly, actually. So Yellen was being questioned. People have never had it so hard. They're feeling real tough. The inflation's real tight. Their earnings aren't going up, etc., etc. And she was like, yeah, we hear this. We're not seeing it in our numbers, but we hear that the Americans are suffering. They did the fastest rate of increases, the Fed. This was Yellen, who's now on the Treasury, no longer the Fed. It's important to make that distinction. However, they did one of the fastest hikes in interest rates, and it has started to catch up with housing markets. It has started to catch up with cars and repossessions. It has started to catch up with overdrafts and bankruptcies, etc., etc., etc. So in actual fact, retail crypto is not wailing into cheap Bitcoin right now. The liquidity is being sought. Liquidity is sold off to meet living costs, which have gone up and continue to go up. And forget all of this talk about inflation's now been tamed. There's basing effects when you compare it to a higher period last year. Oil is up, coffee's up, sugar's up, live feeder cattle is up. All the big commodities are up. Natural gas is turning to the upside. Uranium is up for your nuclear power. I'm afraid energies, generally, agris, all showing real signs of strength, which means those input costs are only going to get higher. And of course, the bifurcated world global supply chain is what it is. And that's not going to get any simpler or any easier. So you're seeing a rollback and a reversal of globalization that actually put a lid on costs and brought it down and brought costs to the lowest common denominator, where you imported everything, and China ended up the workshop of everybody, including maybe a bit of India, a bit of Vietnam, and a bit of other nations as well. And now you have to onshore all of that at much higher labor costs. So the retail consumer is not great, and wailing into cheap Bitcoin right now is not on the top of his priority. The institutions are continuing to be dumbfounded and confused by an aggressive SEC that doesn't seem to win all its cases, but certainly is determined to be obstructive for now. So that environment is not bringing in the institutional money, although I'm sure if we get a nice big fat spill, BlackRock will be amongst some of the others quietly accumulating the distressed retail consumers' dumps as he seeks any form of cash and liquidity, as the market has a major shock under this interest rate environment. The banking system and the banking sector is under stress and is likely also to go down. So with all that said, this is a very weak rally off of this level, and the hypothesis that we put to you for quite a lengthy period is that there is a distinct possibility, I'll go fat, cokey, and black, that this could turn out to be like that, and you get some form of complex shouldering like that, and you end up with a head and shoulder to the downside, which when you do the target, amazingly, will bring you out to the 20k, which is very close to invalidating the stop loss of the original structure. So we could have rallied, set up a structure, failed to press on, set up a rollover structure, and now we're coming back down. That is indeed one of our primary scenarios that we've shared with you on an ongoing basis, which would make potentially 28, 29k Bitcoin a very interesting possible short with a stop loss. In the meantime, I would say somewhere above there. You could go all the way to the top of the head, but that's a bit far away. Maybe just the other side of the 30k mark. So let's go back to our TG Pink. So a tactical short could be taken, for example, with a stop there, and anywhere maybe starting as early as the 28Ks, possibly up to the 29Ks, if you were to get there. And we could watch for fractals, smaller time frame setups that point to reversal on a lower time frame on what could be a top of a right shoulder. And then you could actually get short Bitcoin. Those could do quite well. By the way, the 50% is not the Bitcoin short, and I'm not currently short Bitcoin, but that is a possible tactical trading opportunity and idea that we can discuss and share. And if you were to get in, let's say somewhere in the middle there, and you would have risk up to there, you would have reward down to there. So as you can see, that would be quite a good reward zone relative to your risk zone over there. Okay, so that's how you manufacture a reasonable reward to a fairly tight risk potential trade. And of course, I haven't gone to the full head as stop, but I chose certainly an area where there was a ledge and there was some support for some reason, and we're guiding around that. So overall, I'm concerned for Bitcoin. When you look at the gradient, the line of efficiency we were discussing, it continues to fall further behind. So remember, its current behavior, it is here and it should be there. on that line over there. So that continues to widen quite dramatically. And its current momentum is actually not that assuring that it's going to close up to that and get there on time. So this is pointing to a failed pattern. A failed pattern can be one of two things. It could fail but not be bad. In other words, it could have traded out here somewhere, never made our 40,400 target, but had you bought long and you'd sat the whole way, you'd still be slightly up. But generally when patterns are taking too long, and this is a long stop date, normally they perform well before, even the long side. We get 10% on the shorts often of the time frame use. You get 40 and 50 and 60% on the long sides. It's a long stop date where we say, no, there's a new force in town. It's countervailing. It's bringing it against you. And actually, you should be getting out. Normally, when that happens, you're often about to go into a reversal of some form. So when you're this deep into a potential head and shoulder now, it's more likely that we're looking at the original pattern's failure and the possibility of this particular outcome being restored. And in fact, if you marginally overshoot the 20k, which you're likely to, you will also, as parcel of that, probably invalidate the right shoulder. That's that part of the original bull pattern. So as part of being successful to the downside, you invalidate the original setup and say that never happened, it failed. So that's with that in mind in Bitcoin. I want to warn everybody that there are real money-making opportunities, but not on the long side. And there are real setups and real wealth that can be built. Let's just have a look at the one we did give you. A little bit light on the volume for those of you with bigger accounts, but for the everyday guy with small amounts of Bitcoin to trade, fractals, 0.2 of a Bitcoin, you will be just fine probably on this one. So I'm going to, let's try Bitstamp and go to that one. So Wi-Fi was the one we brought to you, and we did show this particular structure to you, and we are highlighting a far bigger move in this. Let's go weekly. Weekly might be a tiny bit big. We've highlighted a 1700 target. So not only is this highly liquid one going to probably half, but this one that is less liquid is a smaller actual token and more tricky for you to get into and get out of. So you have to watch your sizing. But for those of you with smaller accounts, it's actually an even bigger percentage. It's an even bigger percentage. But the value of liquidity is execution and not getting slippage and not getting messed around, and you will learn to value that. But for small accounts, this is an unbelievable trade. You could be getting in at 5421. Of course, we were getting in at 62, higher up over there. And it's well in the money, but it's still not done its main triggering event. Its main triggering event occurs at 48,000. You can see the alerts we've set, and target down at 1770. So that is a huge fall. And currently, remember, we're getting shouldering, the right shouldering, the upside of Bitcoin at the moment, but very soft and weak. I want to highlight that that's very soft and weak. If you look at it on a weekly chart, this is not breakout momentum that's going to run the previous high. It's very good to go up to the big time frame targets, time frames for your patterns, and see how they are performing on the big time frames. It's very clear. Here you can see, as I say, minor little rally here, but we're deep in the money with this one, and we expect that to be engulfed in due course and to come back down. So YFI, big move. We've spoken about it. Yearn is going to have some problems. That's a big fall, by the way, even from current levels, 5.4 to 1700. Even if I made that 1800 and 5.5, you'll appreciate that that's still quite some fall that you're going to be getting. So just going back to the Bitcoin and the bigger time frames, it's almost worth it to illustrate that point I was making in person, because I didn't actually show that to you. We'll go back to Stamp and we'll show it to you on a bigger time frame. I'm going to just take the eye of the tiger off there and show you on the weekly. And what you'll see here is that this is far from strength. Even on the move that only gave you a marginally higher high, you got those two candles. They didn't continue much, and you ended up with that marginally higher high, which we say is bearish. But even within that, there was some real momentum out of the falling wedge. Now you've come down a second time, and this is your momentum. Let's draw that those two again for you. So far, it's really not that good, and we are Wednesday. Tomorrow's Thursday. There's not much of the week left, in truth, and it's not looking like it's going to get any zippier, in my opinion. And this is faltering. This is an exhaustive final bounce that really satiates the buy at market bulls, so that they just aren't there in the bid stack later on when the market is selling off. I also want to highlight some bigger possibilities, bigger time frame possibilities for downside that maybe need reiterating as well. For example, you could look at a basing ascending grind line such as that. And you could start contemplating patterns along the lines of that. Now that, what is that setup that I'm drawing for you? Well, as I'll explain, it's a rising wedge, of course. I put the middle roughly there, and I will split this wedge something like that. And you can see how we capitulated at the splitter over there. It was a zone of support over there, how it works. I could see us going up, 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 and over, and then coming back down. And you could look for fractals. You may even get another smaller time frame rising wedge. Should have maybe done those in a different color, which could on a lower time frame invite you into the short trade, but you'd need to have to watch and observe this. So I don't think this right shoulder is going anywhere near as high as that one. So I think that, you know, the just running 29k will actually be the high end of my expectations. Just getting to the 28k or even softening before the 28k are all possibilities for how high she goes on that right shoulder. But at the moment, it's not looking that buoyant. And as you see that, you are probably easier able to visualize that you've already had one bump up. You could have a complex right shoulder, you know, where they go up this high a couple of times. You go one more time and you reject again. So you have a sort of a shoulder that is longer but lower, whilst this one was higher but in a more concentrated time frame. And then that's, you know, that's your structure. So those things are all pretty negative for Bitcoin. And you're saying, well, you're bumming me out. No, it's an opportunity. It's absolutely an opportunity. And there's a better setup on our primary alt. And you can find out which one it is by clicking the link below and see what levels we're going to be getting short at. And we're hoping that it's going to come and kiss those levels. And if Bitcoin starts turning, and it hasn't done, we'll probably bring those orders down and ensure we get filled for the downside. And there's a number of platforms you can utilize on this particular token. You won't be short of them. I'm almost assured that one of the platforms, at least that you're currently utilizing, will have that token and the ability for you to short it. That's how established the token it is. So you will have real liquidity to trade some decent size. So that's it on Bitcoin generally. I want to mention dominance and also say, whilst Bitcoin is inching up, the dominance is with Bitcoin. So the altcoins are not joining in with that activity. Let's put a bit of, we were the people that originally told you about the Bitcoin dominance being the assertive trade. When we were leaving here, we felt that it was going to break out of this orange box that was in and around the 47%, and there was your primary move. Really, really strong. Really, really strong. Took you right up to, let's see what level that was, ish, to the 52.25s, right down the 47. So you finally blew all these red circles away, as we felt you would. So this has led to Bitcoin being the more dominant one, and now, after pulling back, when you had a little bit of a rally on the others with Bitcoin getting stronger, so there was mini feeling of, is this a bull? What you're actually seeing is the Bitcoin dominance is coming back beyond the 50% mark again, and it has broken out of that broadening structure, which we expect. So if I take you into the lower time frames and just clean the face, when you break that red line, then you are going higher. broadly in what was a broadening structure. We expected that to happen, so that's why we drew this one red, because it is as you thrash out, it is because it's descending nature, you're more likely to break the upside on the way back up. So that is seen. Bitcoin actually, even though it's moving very moderately up in a very slow manner, it is seeing that it's gobbling up most of the upside, and the alts themselves are a little bit lackluster generally, particularly outside and beyond Ethereum as well. So that's that. And just to further elaborate on this, gold has hardly set the world alight recently, but if you have a look at the same structure on the gold market, you can see very much the same thing. So I'm going to drop that to around 3 days maybe and give you a bit more detail. But you can see this is a very weak effort at getting away. And this is in an environment where gold has been far from very strong. In actual fact, the dollar's broadly been doing better. Gold sold off a little bit. Now maybe a little bit of improvement, but you can see Bitcoin is not shooting out the lights on any crosses. So even if we take the dollar aspect out of this, the structure remains. And in fact, it's almost a better quality one because the head is higher here than that shoulder and is equally tradable. So we are getting to the point where it's starting, round about here would be my top line level that I would expect for it to make. It doesn't mean it has to go that far even, but round about here. And the next move could be quite strong and firm in momentum down to the neckline, and that then becomes where the birthing moment for our pattern will occur. And by then you already need to be short, you need to know where your stops are, you need to have sized, you need to have done everything, and that's what we're focusing on. And click the link below and find out how we will be trading that unique altcoin going forward. And until next time, be careful out there in crypto. It's looking bearish. It's not the best news, but actually it could be amazing news. Shorts make you money fast. I'll say that again. I'm not provoking your greed reflex, but you need to know, and you have to have methodology, stop placement and entry. But if you're entering on a limit order and you have a already established stop and you've calculated the worst case for you on the downside, a highly explosive, quite substantial downside reward is awaiting for you, and it's great liquidity for your execution. So find out more about that, click the link below and book a call. Thank you for watching, and we'll catch up with you again soon. Bye.